Many thanks to Crypto Foiler, who asked me, Ken, maybe talking about the previous tweet on macro intercorrelation, not conspiracy and not media narrative. Now, thank you very much, my friend, for that particular question. Now, what Crypto Foiler is talking about is this big sell down in Bitcoin, which led to $19 billion worth of liquidation inside the crypto market. To say it was brutal is an absolute understatement. 1.66 million positions were closed out. The majority of the liquidations were long liquidations, but still some shorts got liquidated as well. This is why it's really important to trade at spot until you're an absolute expert. And even then, you've got to think again. Because a lot of people get into leverage because they say, oh Ken, I've got so little money, I want to multiply it. Basically, if you don't know what you're doing, you'll multiply your losses and not your gains. And this poor guy, I made $1.5 million in 1 year, but lost $2 million in 1 hour. This is leverage. There were a lot of tweets on social media, a lot of posts on X and just all around the place saying this was a conspiracy. The big end of town just dumped. Nobody could have seen it coming. Well, that's not actually true. We saw it coming. For example, Rundle Rich said, "Thank you, Ken and Kate. The cheat sheet saved the day for me. I was prepared with action." And this is just how things work inside our community. Colin said, "The early VIX spike saved me, Ken. Thanks so much. My own personal stop loss saved me. I'm listening. I only got my fingertips burned." Unfortunately, the cost of not knowing is very great. If you don't know how the markets intercorrelate and interconnect together, you become a victim of financial markets. It is a really sad thing to see that a lot of people lost a lot of money and also they lost their confidence. This guy, 2 years' work gone in 10 minutes. Another person, everything went to zero. Yet another one, $400,000 completely vanished. This person, 8 years of grind gone in seconds. This one, I lost everything. The common theme in all of these terrible things is that people work for months and years and just got wiped out. Now, how do you prevent this happening? Because you can prevent it. There are definite ways to deal with these issues before they occur. And the thing to remember, when we look at Bitcoin, all of those liquidations occurred inside this candle. The first thing to understand is rule 1. Only knowledge creates profit. If you don't know what you're doing, you will get wiped out. It doesn't matter what market it is, it's always the same. Unfortunately, a lot of people just think that they can get into a market and just compete with the big guys, not understanding that the big guys actually know what they're doing. Now, how do we level the playing field? One of the ways is to grab your free cheat sheet from CTKSmethod.org. It's absolutely free and it will save your butt, no questions about it. When we look at the cheat sheet, it's got 7 rows. Row 1 and row 2 measure risk on and risk off sentiment. Row 1 and row 2 flow into row 3, which are the major market indexes. Major market indexes literally determine row 4. They also determine row 5. Crypto and the major market indexes move together. It's very important to understand this. In order to answer Crypto Foiler's question, I need to create this connection. And a vital understanding, Bitcoin determines the direction of the alts. So if Bitcoin is moving up, Ethereum is moving up. If Bitcoin is moving down, ETH is moving down. Litecoin, Bitcoin Cash, Ethereum Classic, BNB, you get the idea. And if Bitcoin crashes, these alts are going to crash like hell. And it also goes the other way. If Bitcoin is melting up, the alts will melt up like hell as well. This is a law inside the crypto market. No alt can escape Bitcoin's gravity. Therefore, coming back to Crypto Foiler's comment, how do we talk about macro intercorrelation? The first thing we need to understand is who's driving the bus of risk. And primarily, it's the VIX. So let's overlay the VIX on this chart. I'll show you exactly how to do it. On TradingView, just come up here to this little plus. And then just compare signal, type in the VIX. Now what we need to do here is to do things just a little bit interestingly. You want to add this on a new price scale, so just click that. And then you will see the VIX just pops in there. You can change the color of it. I like to change it to red. So if you just find it, go in, change it to red, just like that, kabang, all done. Now, turning on log is a really good idea, and also turning on the auto, because you're basically aligning these two charts. Now, when we look at this, what we can see here is that the VIX spiked up like hell before crypto sold off. You can see the VIX was just gaining a little bit. It was starting to lose that support there. And of course, we look at structure. We don't just look at a naked price chart, because that's not the right thing to do. We must know what's going on. And as the VIX spiked up, Bitcoin started to come down, but it did take a little while before the crypto market went into free fall. There's that opportunity inside here to avoid really serious losses. This is why CTKS students literally don't have to get burnt by price action, but you must know how to sell as well. So if I just do this, I've just right-clicked on this price action, price axis, and inverted that. Now this gives you a directional correlation or directional signal. Now what does this mean? You can see that we had that sharp retracement in Bitcoin, a recovery, bit of a wobble, came down, went up. Look at how this is following. Bitcoin is following the inverse VIX. You wouldn't believe how many people do not know about this. This is 101 in the CTKS method. If you have friends and family that don't want to lose their entire accounts, please share the contents of our channel. It will really help them out. Now, macro intercorrelation through the VIX is one thing. We need to look a little bit more deeply into what happened to the major market indexes. Remember, we're just looking at one little component of the cheat sheet, comparing it to Bitcoin. Now we're going to look across these ones, the major market indexes. Now, why is that important? Because the major market indexes measure risk on or risk off sentiment. To compare, the S&P 500, just go to the plus, just type in SPX, and then we'll just pick one of these little guys to add as a new price scale. Then you can add in the NASDAQ Composite Index, which is IXIC. Let's add that guy in. What about the Russell 2000? Okay, which is the RTY. Let's just add the in. Yeah, why don't we go for the Russell Futures? Okay. Very good. And what about the Dow Jones Industrial Average? Let's add that one in as well. Now, what are we seeing here? A lot of people said there was no way to pick that the major market indexes, everything sold down. Trillions of dollars were lost across the board. Now you can see as the VIX spiked up, and that means the inverse VIX spiked down, you saw the major market indexes all moving together. And this moving together is what they do. And CTKS students, we understand this. This is literally 101. If you do not understand this macro intercorrelation, you're going to bleed money. And it doesn't matter if you make money. Just think about all of those people who were grinding away for 8 years. One day they lose everything. Please do not join their ranks. Now, a critical thing to point in here is conspiracy theories and media narratives. Typically, when you get a media narrative, and from social media, it's always the same. It's always, oh, they planned it, they did this. When the 1929 crash occurred, people were trying to stop the crash, not add to it. Same in the GFC. The problem inside all markets, and I mean every single market, crypto is just a faster moving market, but it's one that you can get out of 24 hours, 7 days a week. And that is really important, because if you're locked into the stock market, when it crashes, you typically can't even access your brokerage. They all mysteriously fail. Crypto has incredible uptime. Now, a lot of people will come in and say, oh, but Ken, this VIX spike was caused by X, Y, and Z. It doesn't matter why it's caused, it only matters that it occurs. Now, how could we prepare for this ahead of time? We have a very systematic way of looking at market price action. When you look at row 1, and the Profiting Masterclass has many tricks and tips on how to read across the markets. I'm offering 5 near full scholarships to the Profiting Masterclass. This masterclass has literally 105 lessons where you can bypass these terrible drawdowns inside markets. In week 1, you'll learn how to think differently to overcome the barriers to consistent profitability. I cover off a thing I call Retail Trade Perfection, or RTP. RTP is terrible. It's the reason that people get slaughtered inside financial markets. In week 2, we go on a deep dive into these cheat sheet components, predicting the tops and bottoms. Predicting the bottom of the VIX is really important. Predicting when the VIX could be at risk of spiking up, very important. Personally, I was not impacted by the crash. The VIX was at a really critical juncture. It could have gone either way. It could have melted down and saw a broad-based rally, or it could have melted up. I was waiting to see what it was going to do. It also has understanding how to predict the tops and bottoms of gold and silver, Bitcoin, and the cryptos. In week 3, we get into the meat of everything, how you actually trade in a very negative market. When you look at the financial markets throughout 2025 and 2026 and beyond, they're going to be choppy. There's no question. Everybody is just conned on the concept that they can only make money in bullish markets. You can make money in any market. It doesn't matter if it's bearish, if it's bullish, if it's consolidating. It makes no difference with the CTKS method. And I'll show you the proof of that inside these areas. If you're interested in obtaining this near full scholarship, please reach out to me and directly message me on LinkedIn. I'll be deciding these scholarships by Friday, so you've got a couple of days left. All you need to do is to reach out to me directly on LinkedIn. The link is actually in the description of this video, and I'll help you out. I want to make sure that I can protect people who really take their learning seriously. This is actually a template from the Profiting Masterclass for row 1. So you can see inside row 1 the VIX had been basing. And of course, our community understands what this means, because when we overlay Bitcoin on the VIX, and I'll just invert it for you here, what do we see? There's a really close association, directional relationship between the VIX and Bitcoin. But you know that when the VIX spiked up, it also brought the major market indexes down as well. So it's not just between Bitcoin, it's inside the stock market also. Now, what do we notice here? The VIX actually spiked up, and it's not decayed as much as we would like. This is, of course, on a daily basis. But when we look into this, actually, let's just go for a bit of a search in right here and now. You can see that as the markets were coming up, as Bitcoin was coming up, the VIX was basing. It looked like it could cut down and rally, but unfortunately it decided to go the other way, and that pulled all of Bitcoin and crypto down with it. You can see that it came down, retraced, and the VIX still wants to go up. This means that this is potentially not over. We could get extended spikes up. We are prepared for this. So many people just follow a narrative. If you look at most influencers, they will say up only, buy the dip, diamond hands, and your portfolio gets shredded to death. You've got to go beyond that and become an institution of one. Institutional traders don't just pop into YouTube or look on social media for tips and tricks. If they did, they'd get fired. So why should you be? You should be looking at the charts and understanding what they mean. What is a bottom on the VIX? What and how does the DXY relate to the VIX? And how do the yields relate to the DXY and the VIX and Bitcoin and the major market indexes? These are the things that you'll learn inside the Profiting Masterclass. Everybody is eligible. If you're keen, if you want to learn, please reach out. Please contact me. I want to look after you. To a Profiting Masterclass student, all of these charts mean something. It means something significant. And it can mean something significant to you as well. And if you're a Masterclass student, please make sure that you share this video. I would like, of course, friends and family members to benefit as well. If you've never got a scholarship to anything, I want you to reach out and contact me. So many people are told they can only make money in an upward market. Well, that just offers you a degree of protection. But when you understand price action, when you understand what the markets are doing, you can make money in any market. When we look into row 2, which are junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper, we can see that junk bonds are curling over. Remember, the VIX is curling at the moment. We expect major volatility to enter the market. We can also see that gold and silver has been going literally parabolic. When you get these kind of parabolic moves, the corrections can be very nasty. And such a nasty correction happened in copper a while back. They can recover from it, but you really need to be aware. Corrections and flushing out of oversized leverage on either direction is really normal inside the markets. It's not something to run away from, it's something to take advantage of. Looking into row 3, you can see how this blue line, when this is the S&P 500, the Dow, the Nasdaq, and the Russell. The blue line is Bitcoin. Look at that intercorrelation. Look how Bitcoin and the major market indexes move together. This is actually really important because if you understand this is a relationship that you can't unsee. When you see it, you know. If the major market indexes are weakening, we expect weakness inside the crypto market. If they're strengthening, we expect that strength will come through into the crypto market as well. The Profiting Masterclass has templates for each of the rows. And when we go down even to a lower time frame, here we're looking at row 4, which is Apple, Microsoft, Nvidia, Tesla, and Strategy, formerly MicroStrategy. You can see that as the markets are coming down, Bitcoin is a really good risk on and risk off indicator. And look at the intercorrelation between the major stocks. For example, Microsoft, did it escape the sell down? No. Did Nvidia escape the sell down? No, it didn't. Did Tesla escape? Did Apple escape? I put out a video just a few days ago about what was important for you to look at, namely rare earth. Rare earths are very important for Nvidia, and we can already see weakness here and in Nvidia's chart. That is not surprising. Strategy has very large Bitcoin holdings, so it's not only an IT company, it's also a Bitcoin treasury company. It will be following Bitcoin, but you can see the major stocks are just associated with Bitcoin anyway. A lot of people just simply don't understand this. Again, that lack of financial literacy blows their accounts up, but not in a good way. I teach you so many hidden secrets and tricks and tips inside the Profiting Masterclass. One of them is time-based analysis. You can see these are the S&P 500 futures, the Dow futures, the Nasdaq futures, and the Russell futures. This is also a template from the Profiting Masterclass. You can see how they all sold down. You can see that there, and they took Bitcoin with it. Pesky blighters, but this is how it works. Now, what was this about? Don't worry about looking for the news. It was the end of session in the US session. They simply didn't want to hold. And when you look at the trend, it was starting to weaken just slightly. And when it fell like a brick. Now, if we keep our eyes on, and you keep your eyes on the futures throughout the day, if they start to do this, you already know where Bitcoin is going. If they start to do this, you already know where Bitcoin is going. And your cryptos will magnify that move by 2x, 3x, 4x, 5x plus. Looking into the crypto market, which is of course row 5, total crypto market cap, Bitcoin, Ethereum, we have a hidden superpower. We understand why price actually moves around. We have a thing called CTKS structure. So remember how the US market sold down. The total crypto market cap came into structural overhead resistance at 3.82 trillion. There was a lot of structural underpinning support at 3.8 trillion just through here, but we did a structural fail, structural overshoot to this support at 3.76. We've just done an underside retest. This 3.8 trillion is really important for you to keep your eye on. If we get above there, the crypto market could indeed go higher. And the Russell 2000 has shown some signs of life, but the major market indexes are a little weak, and we know Nvidia is weak as well. And that's basically holding up the entire AI play. We also see that we're under structural resistance. Now, these dotted lines are called CTKS levels, or SLs, called Stanfield levels. These are formed through 2 levels of standard certification. They are not random lines just drawn on a chart. They are scientific excellence. These are the strongest support and resistance lines in existence that you can do inside technical analysis. Now, what does this mean to us? It's a very straightforward thing. If we lose 112,640, this particular structural support level there, we are favoring negative structural attraction, or NSA, to 111,200 into this area, which is quite strong. This is a really good setup here. And if we overcome these levels of structural overhead resistance at around that 113,100 mark, we need to get above that and get above this 3.8 trillion. We need to do a variety of different things. That is fantastic. That reestablishes the bullish case. If you were just looking at the price chart like most people do, for example, if you were just looking in here, you wouldn't understand all of this structural issue. And if you don't understand the structure, you don't understand where smart money is buying and selling. That is incredibly risky. Okay, let's have a look at Ethereum. What's the structure looking like for Ethereum? We can see that it has overhead structure at 4150, and it has structural support at 4074, just around this tail area. So it got rejected. And when, for example, if you were trading and investing in Ethereum, what you'll need to do is your cheat sheet, your intercorrelation, interconnection, just like what we've done, but we put the structure on those charts. And also, you'll need to look at total crypto market cap and Bitcoin, comparing it back to ETH. There are quite a few steps and stages that you need to progress through, but otherwise you will find you set your money on fire. The problem is, with the vast majority of traders, they will only look at their money chart. So for example, if you're just trading and investing in Ethereum, you would just look, if you're like 95% of people, you would just look at the ETH chart. And in a way, it kind of makes sense. The theory would go something like this. I'm trading and investing in Ethereum, so therefore I'm not caring about total crypto market cap. I don't care about Bitcoin. I'll only look here, and I'll just make up the levels randomly. and I'll say, oh, I can only figure out where resistance levels are after price prints. Oh, there's obviously support there. Yeah, there is, but not on that chart. The support for there is on total crypto market cap. This gives you a concept as to why you need to look at different charts, and you need to look structurally as well. Let's get a little bit deeper into this. Row 6 from the Profiting Masterclass template. You can see that Bitcoin and Litecoin, I'll just go through them, Bitcoin Cash, Binance Coin, Ethereum Classic. The blue line is Bitcoin. This gives you a directional momentum inside every single crypto. It's so important that you understand this. Unfortunately, many people don't. A lot of people will say, oh, I want my random coin, whatever that coin is, to crash Bitcoin. If Bitcoin crashes, your random coin will crash. Please don't think like that. Again, you see such tribalism inside the crypto market, and it's just simply that people do not know the rules of price. And all of that's okay if price is just going up and up and up mindlessly. But as soon as we get some kind of real pullback inside the market, people who know shine out. And those who gambled get obliterated. Let's have a look at row 7, and we'll look with the structure on. When we look at ADA, one thing that we can see with ADA around that 70.24 mark is a key level of structural overhead resistance that must be overcome. There's a lighter one up at 768, and you can see the price is interacting with the 69.61 level of structural resistance. It's been acting as structural resistance, so this is the key one to flip first. If Bitcoin continues to go positive like this, it will be flipped and create a structural target up to that 70.24 area immediately. When we look at Solana, it's got bookends basically on that 204 level. It's got a massive structural overhead resistance, and also around the 202. A lot of people think that there's just must be a massive amount at 200 because that's a retail number. We don't do retail numbers here, we do structure, and you can see that they would all actually be incorrect. The area of structure, and it's really strong, is around the 199 area. Solana's looking interesting. And for Doge has more overhead structure than it has underpinning support, but it will get all of its momentum through Bitcoin. If you've ever wondered why something can just take off, something gets stopped and doesn't go up as much as other things, or something gets caught in between two areas and consolidates, structure tells you it is elite. And looking into XRP has that underpinning structural support at 247.73, has a lighter overhead area at 251.16, and just above that at that 252.38 is a structural target. Everything depends on Bitcoin and also on total crypto market cap. You can see there's a lot to learn, and if you're really serious about avoiding losses, booking in your profits, and doing well from financial markets, not just the crypto market, but any market, price is price. Price waves are price waves, and structure is applicable to any market. Please reach out to me. There are 5 near full scholarships available for the Profiting Masterclass. And all you need to do is just directly message me on LinkedIn. The link is in the description of this video. And if you have family or friends or work colleagues, anything like that, please let them know about this. This will really just fast track everything they do. Unfortunately, many of the influencers out there just don't understand intercorrelation and how all the different markets move together as one. So getting back to what Crypto Foiler was talking about, when you understand how the world's markets all move together, you see things with a level of X-ray vision that other people simply do not have. And you need that. You need an edge. If you have any questions you would like to ask me, please drop them in the comment. I would really appreciate helping you out. Kate and I are here for you. We want you to succeed. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.